Welcome to Trader Talk, where we dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Polcari, and I'm coming to you live from the Yahoo Finance studios here in the heart of New York City, a global hub where deals are made, fortunes are built, and the next market move is always just around the corner. Coming up, I'm going to share my thoughts on investor curiosity and education. We're going to chat with my good friend Caleb Silver and share my bay scallops and a black truffle cream sauce. Oh my God, they're so good. Now, let's just jump into the big take. The moment you think you've got it all figured out is the moment the market humbles you. It's not an insult, it's a fact. Markets evolve, technology shifts, policy changes, and new risks appear out of nowhere. If you stop learning, you don't stay still, you fall behind. Curiosity is one of the most underappreciated edges an investor can have. The best investors are not the loudest or the most confident. They're the ones that are constantly asking questions. Why is this stock moving? What has changed? What am I missing? They read, they listen, they study history, and they challenge their own assumptions. They know yesterday's playbook won't always work for tomorrow. Now look at how quickly things change. A decade ago, no one was talking about AI as the driver of earnings. 20 years ago, few imagined smartphones would reshape the global economy. Go back even further, and entire industries that once dominated have now vanished. Investors who stayed curious adapted. Those who clung to old narratives, well, they got left behind. Learning isn't just about chasing new ideas, it's also about unlearning bad ones. Knowing when a thesis no longer works is just as important as finding a new one. Curiosity keeps you flexible, it keeps you humble, and it keeps you open to opportunity when others are stuck defending outdated beliefs. Bottom line, the market doesn't reward confidence, it rewards preparation. The investors who win over time are the ones who never stop learning, never stop asking why, and never assume that they've arrived. Stay curious. It's the one edge that compounds forever. My next guest is Caleb Silver, Chief Business Editor of People Inc. and Editor-in-Chief of Investopedia, one of the most trusted financial education platforms in the world. And I should say, he's a very good friend of mine. I've known him for years. Caleb helps millions of investors make sense of markets, money, and the economy by translating complex financial concepts into clear, actionable insights. With a deep background in financial journalism and market analysis, he's at the center of how retail investors understand everything from stocks and crypto to inflation, rates, and personal finance. It's great to have him with us. Ladies and gentlemen, please welcome Caleb to the show. Caleb, it is a pleasure to have you. Nice to see you. Happy holidays, all that good stuff. Happy New Year. It's all very exciting for you because there's lots going on.
That's right. Thanks. So good to be here with you, my friend. We usually are talking over Zoom, and I'm asking you for recipes, but to be with you in person on your show is an honor.
It's so great to be in person because, it's a whole different energy when you're talking to someone face to face. So let's talk a little bit first about this exciting news that you have, because you're still Editor-in-Chief at Investopedia, but now you've got a whole new line in your title. Just tell the audience a little bit what it's about.
Yeah, I'm the Chief Business Editor now for People Inc. People Inc. is the parent company of great brands like People Magazine, People.com, Food and Wine, In Style, Travel and Leisure, Real Simple, Southern Living, Midwest Living. We've got about 40 brands.
I love that whole idea.
Yeah, and they are our parent company. They've owned Investopedia for about 6 or 7 years.
Right.
And so just recently I've sort of now covering the entire portfolio, which I was doing a little bit, but now it's official. So now I'm doing the business of travel, the business of great food and wine, something you and I are passionate about.
Yep.
In addition to being the Editor-in-Chief of Investopedia, we are 26 years old, Investopedia, and I've been with the company now 10 years. So it's been the honor of my life to be the Editor-in-Chief. I still have it. It's still my number one brand there, but now I'm representing the whole People portfolio.
Investopedia, I have to say, Investopedia, like Wikipedia, is a great resource, right? Because there's so much information in Investopedia, and questions answered. People can go in there, they can type a question, they're going to come up with an answer that's easy to understand, it's actionable, and it doesn't make people feel like they don't know what they're doing, right? It's an easy way to understand some complex kind of ideas, right?
And that's what we're known for. We started out as sort of a financial dictionary or encyclopedia, but we are, the difference between us and a Wikipedia is we are written by experts, reviewed by experts.
Right. You kind of morphed into this large educational platform, which I think is great.
Yeah, and that was a good move by us years ago by the founders and the companies that have stewarded it since. We've been a part of the, as I said, the People family for about 7 or 8 years now, but just focusing on education, making sure people understand investing, money writ large, finance, how to make decisions that'll impact your life without being political, without having a bias, just giving people the facts turned out to be a pretty good idea.
Right. Well, because you know something, because investing shouldn't be political. It should not be. While you can understand and take policy into your investment thesis, it shouldn't be political. Right. Certainly, Democrats might have a different policy view than Republicans, but therefore, as long as you understand it, then you can invest. That's kind of what the important thing
Absolutely.
is, right?
And as you know, as a great market historian, it really doesn't matter who's in the White House.
Correct.
Market's going to average 10 to 12% a year on average for the past 50 or so years.
Right.
Could change at some point in time with policy, but in general, investors, they've learned to understand that that doesn't matter as much. We just need to know the information so we can make the best decision.
And for most people, as long as you build a well-balanced, diversified portfolio, it can ride almost any storm. It's when you get out of whack, right? When you get way overweight in one sector or way overweight in another sector or underweight in a sector is kind of when you're out of whack. So I think it's very important. I love what you're doing at Investopedia. I love the whole platform. I think it's great.
Yeah, when you've been a good a part of it and been on my show many times, and just learning from you has really influenced me in my career. So I appreciate
thank you. I appreciate that. So listen, let's talk about a couple of things because there's actually a lot to talk about. But one of the things that I like about what you guys do is that you're really in touch with the retail investor, with sentiment, with how what the retail community is kind of thinking about, asking the questions they ask. So tell us kind of recently, what are top of mind things for retail investors that come to the Investopedia site?
Yeah, so we have about 8 to 10 million readers a month in the U.S. who are just coming through our site to try to learn something.
8 to 10 million a month.
Just here in the U.S., and that gives you a lot of data. We have our fingers on the pulse because we know what questions they ask. Not only that, Kenny, we know the journey they take through our content. So they may start with a question about tariffs, but what they really want to know is what's the impact of inflation going to be on my portfolio?
Right.
So we look at the top terms that people are searching for on a daily basis or what articles are gaining a lot of traction with our readers. And then we look at it on a monthly, quarterly, and then an annual basis to come up with our terms of the year. So this year, 2025, affordability has been the number one term.
Right.
And I think it's not just affordability about the cost of everyday items, because we know those are getting more expensive, except for gasoline. It's about affordability and priciness in general. The stock market, is that affordable anymore? Can I afford to invest?
So this question, we'll talk about that. Affordability, though, was that a term that most recently came to the top of the list, or has it been something there all year?
No, it's been bubbling up all year in various aspects. Right. And it is typically not a term people search for. Typically, they're searching for a root cause. So that could be tariffs, which was our term of the year last year. Number 2 this year, but this year was about the cost of living. Right. The cost of everything. How much does it cost to be me? And why do these things keep going up in price? And I think healthcare and the concern about healthcare premiums rising in 2026. And the shutdown had a lot to do with that.
Right. Well, because it's become the word, the newest term, right? Everybody's talking affordability now. And so it makes sense that the retail investor is going to start searching for that word to understand, what it means to them. What's it mean to the market? What's it mean to maybe a range of things, including healthcare, including, food, products, tariffs, groceries, whatever. Which I think is interesting. What other terms are kind of top of mind for investors?
Yeah, well, this year they were also looking up tariffs, as I mentioned, but gold was huge this year because it's been the best performing asset
2 years in a row.
2 years in a row. And you know how rare that is. No matter how rare the metal is, that's very rare. So people were looking at that. And you could tell that was one end of the barbell. Kind of the other end was AI stocks, right? And some crypto, but mostly AI stocks. And I think that was that we've seen a lot of volatility in them, especially over the past few months, but also some people feeling like they missed the boat, even though they probably didn't, because they own an index fund, which means they own AI stocks. And then the more risk-averse crowd wanting to own gold, wondering if gold's going to continue to go up. How can I buy gold besides going to Costco and getting my little ingot there? Can I buy a GLD? Can I buy a proxy for it?
It's interesting. You bring up a point about when people say, is it too late? Did I miss the boat? Are things too expensive? Think about this. there is always new investors coming into the market. Someone that's just starting out, they got out of college, they got a job, now they got money, they want to put it to work. So they're 24 years old. Can you say to them, it's too late? No, of course not. You would never say to them. You say you have to jump in, right? So you have to start. You start slowly. You start broadly. Maybe it's an ETF until you build, right? But it's never, in my mind, it is never too late to jump in.
Absolutely not. We get this question a lot at Investopedia. How should I invest $10,000 right now?
Right.
Well, the answer for you is different for me. It's different for a 21-year-old.
That's right.
It's different for a 75-year-old. So it depends on you, who you are, and we're trying to help people using technology to give them the best answer. But the fact that we're getting that question a lot means there's a lot of new investors always coming into the market.
New investors that are curious, that maybe don't understand it. They don't know. Or maybe they think it's gone too far. Because, we hear in the news, we're in an AI bubble. So people are now afraid to put money to work in AI stocks. I think that's a huge misnomer because I don't think we're in a bubble at all. But we're gonna take a break. We're going to come right back and we're going to talk about that. All right, so let's come back to the AI bubble because that seems to be top of mind for everyone because I'm in the camp that we're not in a bubble. Stretch, maybe. A bubble, absolutely not. What are you?
Yeah, I'm in the camp that it may be, but I don't think it's the type of thing that's going to explode all at once. There's pockets of this spend and pockets of excess all over the place. We ask our readers in our sentiment survey, we just fielded it, the last one of the year, are you concerned about any of these assets being in a bubble? AI stocks, top of the list, of course. Guess what? Those are also the top stocks they own in their portfolio.
That's right.
So it's self-reflective.
Yeah, I hear you. And I wonder, though, if a lot of people are saying that because they're hearing it in the media that we're in this bubble, which I think is also a negative because I'm in the camp that I think we're at the beginning of this AI tech revolution. I don't think we're anywhere near it, near the middle of the end at all. I actually think we're still in the batting cage. I don't think the game has started yet. We're still in the batting cage, right? But I think it's interesting because they hear the word, they hear the conversation, and so retail investors that aren't in this business every day, they get nervous. What should I do? Maybe I'm not going to put money in the AI trade, which I think is a huge mistake because AI is going to be the future.
Yeah, I agree with you there, and I think people hear it and guilty as charged. The media is always talking about it. Put on any business news channel, and you're going to be like a lower third that says AI bubble, ? Overvalued. So it just bubbles up the more you hear it. But people were also looking and didn't make the top 10, made the top 20 at the internet bubble and the internet stock mania of the late 90s, wondering if this was very similar.
Right. And so what do you think? Do you think I don't think it's similar at all, but
I don't think it's similar at all. But if you go back 3 years and you look at the release of ChatGPT commercially, if you go all the way back to 1996, 97, and you see Netscape's release of Mosaic, the NASDAQ looks very similar in terms of those timetables and the amount that it gained. But this is real money being spent, not pets.com.
Exactly. And they're also companies that have real products and they get real revenues and they've got real growth paths. Pets.com and the rest of them had none of that. They had no income. They had no revenue. They had no history.
Pre-revenue, pre-profit.
Right. And so I always say to people when they ask me, because I'll have investors say to me, it's too late. It's not too late at all. Now, if you're just starting out, it doesn't mean you take everything you got and put it in one day. You would never do that. You have to feather it in over time and take advantage of market moves. That's what I would say to anybody who's coming into the market. So it's a question like when someone says, what would you do with $10,000 today? Okay, is that all you got? Are you going to put more? How much time do you have? There's a lot of questions to ask, right? Yeah. What they need it for, what they're hoping for it to be, how often are they going to...
Can you afford to lose it?
That's right. Well, I guess that's the real question. Listen, I want to talk to you about crypto and tokenization because I think those are two other words that must be on your list somehow. Because I think crypto is one thing. People think of crypto, they think of Bitcoin, but tokenization... Talk to me about tokenization and maybe what retail investors think it means or what Investopedia thinks it means.
Yeah, well, this, I think, is going to be one of the most important themes in 2026.
100%.
The tokenization of assets, including stocks, which means it'll be digital representatives, kind of like an NFT of a stock that will trade on an exchange like the Texas Stock Exchange 24 hours a day, 6 days a week.
Right. And you'll be able to buy pieces of it.
Right.
Instead of buying a whole share, you're going to be able to buy a piece of it.
In a 24/6 market, anything can happen. That's the thing about crypto that brings these together. The crypto market trades 24/7. So tokenization is not cryptocurrency, but it is similar in that it is a digital representation of an asset And in crypto, there is no asset necessarily except the greater fool theory of what people think it's going to be worth.
Right.
So we're entering a really weird space along with predictive markets and sports betting and options trading, and day trading, slamming together at lightning speed. This is going to be the mess we will see in 2026, and we'll see if it blows out the capital markets or if it brings more people into them and that drives markets higher.
You can bet on almost anything. Someone's willing to make you odds on almost anything, anywhere, which I think is kind of interesting. You know, even the odds on who the next Fed chair is going to be or the odds on, you know, where rates are going to go. I mean, they bet on everything, which is interesting, but I think a lot of that can be also noise and it can create angst for people.
It can, but the predictive markets were actually more accurate than the polls.
Yeah, no, 100%.
During the election season.
Yes, they were.
And they're getting a lot closer just because you have a lot more participants, which means more data. Wisdom of crowds can help you get to tighter answers. So if that becomes the leading sort of indicator of which way markets and individual securities are going to trade, that's going to take us into a very strange place because it could be potentially manipulated.
So pollsters are probably going to be out of a job pretty soon.
Yeah, right. Who needs to know that? But take this a step further, Kenny. You got ICE, the owner of the New York Stock Exchange, right, making a $2 billion investment into poly markets because they know that predictive markets, people want this as a part of their mix. One of our top terms in 2025 was parlay, which is a sports betting term when you bet multiple legs of a bet and all of them have to pay out in order for you to win. You want, the Chargers to win and you want 10 rebounds by this guy and whatever. You put together a series of bets. They all have to pay out. They all have to win for you to win. Take that to stocks for a second, Kenny. Yeah. If you're betting on the outcome of 3 different stocks or a different directional move for 3 different securities at the same time, as a trader, not a long-term investor, that could disrupt pricing.
100% it could disrupt pricing. Look, I think a lot of things disrupt pricing. I think you look at triple levered ETFs can disrup pricing. Absolutely. And now they're talking about 5 times levered ETFs, as if we need that risk in the market. I don't think we do. See, I'm on the side that I think they've created this casino-like atmosphere, which I think is the wrong thing to do. But to your point, it is what they wanted, so it's not what they got, but it creates this potential volatility for the guy who just wants to be a long-term investor.
Yeah.
Right?
That's to me, that is one of the biggest questions for the next decade.
Yeah.
And how does all of this affect long-term investors in this diversified all-weather portfolio strategy, doing the right thing, not trying to time the market, just being steady as a long-term index investor or ETF investor? Yeah. That's going to get weird.
It is going to get weird. And actually, it's going to be interesting to see how this plays out because it will create lots. It has the potential to create lots of volatility, and not necessarily good volatility, right?
Right.
Let's talk about behavioral mistakes that you see maybe in the Investopedia portfolio in terms of either the questions asked. But what do you think are some of the biggest errors that retail investors keep making and making and making? Like they're not learning from it.
Yeah, timing. Right?
Timing.
Trying to time the market. We know timing the market is always better than that, but timing is now the right time. Yeah. Taking or not taking profits when they should, not having a rules-based approach to investing, right? So I've had hundreds of people come to me personally and also thousands coming to our site saying, should I take profits in X stock? Right. Not X, NVIDIA.
Right.
Or any of the big stocks that have made major moves. And the question I always ask them is, what are your rules?
Right.
Do you have a rule where if it goes down 20%, you get out? Do you have a rule that if it goes up 25%, you take house money out? Like you need to have a rules-based approach to your portfolio if you're going to buy individual stocks. If you're going to buy ETFs and just index your way for the rest of your life, that's fine. So a lot of people don't have actual rules. Right. They just go on gut or what they hear.
Right. And what's interesting, is that people also say that to me, like when they, like the latest drawdown in the market, we saw, tech take a hit and all that stuff. And right away, I get a couple of customers that call up because they say, I'm too nervous. I got to sell my NVIDIA. No. Slow down. You don't need to sell your NVIDIA. We own it for a reason. We've done our analysis. We understand what it does. The story hasn't changed. Yeah, the market's under some pressure, but that's a cycle that's not specifically to NVIDIA. So unless the fundamental story on why you bought it has changed, why are you selling it? In fact, the weakness you should use to buy it if you still believe in the fundamental story.
Absolutely.
Right? And so you have that. I have that conversation over and over. And as you have it and people get more comfortable with, kind of the swings in the market, they don't nearly get as anxious. But, you have to make sure that the fundamental story hasn't changed.
Right. P.S. I think investors are getting smarter about
Yes,
this too.
I think
and
they
I
are
think
as well.
they've also seen how fast these cycles are moving, Kenny. We had that 5% drop in November. That was bought back in one of the third fastest recoveries in history after a 5% drop. The bear market we had for a minute or two during COVID until the government helicoptered money. These cycles happen quickly. The rips happen quickly.
Right.
The dips happen
because
quickly.
the technology makes them happen
Absolutely. You've been talking about that to me for years, but also individual investors see this happening. We saw through data, whether it's from Schwab's retail stacks index or from VandeTrack, which tracks individual investors' purchases outside of their defined contribution plans. They bought the dip almost at every opportunity this year.
Yeah, I will say that the bulk of my customers, when the dip happened, would call me up and say, "Are we putting more money to work?" They were, because and that's a positive sign, right? Let me ask a question because we're going to run out of time, but I want this view of you. Do you have a sense of what investors are worried about going into 2026? Because it is a midterm election year. Yeah. So are people suggesting that they're nervous about the midterm elections?
Yeah. Midterm elections are about third or fourth on the list. We just asked them that very question. What are you most worried about right now? Number one, inflation. And inflation's come way down, but it is prevalent, going back to the affordability word. Number two, geopolitical instability. Nobody feels like we're in such a hot place right now.
We're not.
And all you have to do is turn on the news and know that we're not. The third thing that they're worried about is bubbles in the market. And that's, maybe they've heard enough of it. Maybe they've seen, a little bit of air come out of this one. Maybe they're worried that this is a redo of whatever, 1999, or the railroad bubble, or pick your bubble, because there's always one or two over a decade or so. So those are the things they're worried about the most. But most people are optimistic. They're not expecting another banger of a 20% year. They're expecting reasonable returns, and I think that is good.
Yeah, but you know what's interesting? In January of this year, a lot of people are expecting a return to normal. Reasonable, 10%, maybe 12% all in when you add in divvies, right?
Yeah.
And it's funny, look what's happened, right? The Nasdaq's up, again, nearly 25%. The S&P's up 16%. The Dow's up, I think, 14%. So it's been a great year. Different than, I think, what even I expected coming into it.
Yeah, and if you're not entertained as an individual investor, you're not watching the movie, because this has been extraordinary. The past 3 years have been extraordinary, and there's been one wall of worry after the other. But guess what? Market keeps turning up and to the right.
Yeah. Listen, we have to carry this conversation on another time. I really appreciated you coming in and have it, and I'd love to do it with you again. But it is time, because it's the end of the podcast, and I always end with a recipe, which I know you love. So today I'm going to give you bay scallops and a black truffle cream sauce. They are delicious. This dish is one of my favorites, and this comes from the ground as much as it comes from the ocean, right? Bay scallops are small and sweet, and they're quick to cook. They're easy to ruin, though, if you don't pay attention. They're asking you for attention. Don't force it, just let it happen. The pan, you warm it up carefully, a little bit of butter and olive oil. You put the shallots in there to soften until they almost disappear right into their sweetness. The garlic follows that just enough so that the dish knows the garlic is there. Then you put the scallops in, you sear them. You want to hear the sizzle when you put them in there. And then you add a little bit of white wine to just lift the pan up and deglaze it. And cream moves it slowly into this thickening, calming sauce, right? Then you add the black truffle. That's where it enters quietly. You shave it thin. It warms right into the sauce, and that's where the earth kind of folds into the cream. It replaces the depth with some brightness, right? It's a whisper of white truffle oil that comes at the very end, not enough to dominate it, but enough just to finish it, to just carry it far enough that you get this delicious aroma. And then the green leaves of the Brussels sprouts add a richness and a balance to it that, well, listen, you can scan the QR code on the screen for the full recipe, and you can thank me later, trust me. That's a wrap for today's Trader Talk, but the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcasts. You got questions or topics you want covered? Email us at tradertalk@yahooinc.com, because we're always listening. Until the next time, stay sharp, stay disciplined, stay in touch, and take good care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.